Hi, Krim. This is the You're Not Even Wrong podcast, June 5th, 2020. Let's go through the numbers. For the week, this is a Friday, June 5th. So for the week, we're up about 7.2%. The S&P is up 4.2%. So we outperformed the S&P by 3%. For the year, we're up 54%. The S&P down 1%. We're outperforming by 55%. Contributors to the portfolio are particularly Tesla. Tesla made about 5%. As a reminder, Tesla is 70% of the portfolio. Then we have 10% in Microsoft, 10% in Intel, and we have 20% in a basket of biotech stocks which are exposed to the CRISPR technology and also gene sequencing. So the biotech basket has contributed about 1% this week, and Intel half, and Microsoft half percent. In terms of news flow, I think some of the interesting events since June 3rd, our last update, there is one event that we spoke about. And just as a reminder, the purpose of this podcast is to give people a sense for what it is to run a hedge fund and how we are doing it. So it's not like we're taking credit for knowing how to run a hedge fund, but for people that have a curiosity of how it is to actually be inside and what's going on. And I think part of the conversation has to be also what is it we're actually talking about? What are we thinking? What is occupying our time when we have meetings and when we talk about what's going on? So that's why I'm going to list some of the most important thoughts that we're expressing, and they sometimes are actually relevant for the daily performance, and sometimes they're not. So one thing that I don't think was very relevant for the performance in the last couple of days for Tesla, but it is something we're talking about. It's a tweet that Elon Musk sent out about, I think the tweet was something along the lines, he said that monopolies are bad, and the context was that Amazon did something uh, about censoring somebody's book, and he kind of alluded that Amazon should be broken up because monopolies are bad. And we thought about this, and we're very, very highly exposed to Tesla, so we do care about what Elon Musk is thinking. And my personal opinion is I don't like the idea that Musk is using Twitter as a sort of communication tool for himself. I'd much rather have him, if he really wants to be close to people, if he really wants to express his opinion about what's going on, and if he wants to market his ideas and his companies, there are better ways. And he could do a weekly podcast, he could do a weekly Q&A, he could even meet in person with people. I don't know. The problem with social media, not just Twitter, but any kind of social media, is that it has this immediate sort of limbic type feel to it, and very often I think it's just not very well thought through. In this case particularly, I think Musk is on a very slippery slope, because let's assume he really thought that Amazon is a monopoly and should be broken up. Let's assume that's his thinking. I would think that that's problematic in two ways. Number one, Amazon did not become a monopoly because they bought other companies or they did predatory, you know, act tactics like Rockefeller style, killing your competition. I think Amazon just grew into this powerful position because they out innovated everybody else. And yes, are they sometimes maybe using predatory things like, helping their own products to be sold versus competitors' products on the website, or featuring their own stuff more prominently than maybe other people's products? Yes, but in the end, they really became this strong because of a very, very strong focus on R&D and innovation, and fast iteration, and very, very good capital allocation. And I would argue that this is exactly why Tesla has so much potential. So 5 to 10 years from now, I see Tesla monopolist in many markets, and in that sense, actually very similarly to Amazon, they could be in a position where people will say, well, you should be broken up. So it doesn't really help for Musk to now talk about breaking up Amazon, but maybe in 5 to 10, or maybe even earlier than 5 to 10 years, he could be in the same position. If he really has a desire to communicate this topic in a sort of maybe academic or philosophical way, if he wants to talk about monopolies and the risk of monopolies and the benefits of competition and liberty and libertarianism and whatever else he's thinking about, he should, he can call a conference. He'd be a very welcome guest to any kind of podcast or speech forum or anything where this type of stuff is being talked about. He would be a very welcome guest. So I think there's many ways he can express his opinion, and I think in this context it's just not very helpful. Uh, I don't want to talk about social media right now, but just as a side point, I am not very happy with social media as a communication tool for companies, because it's too, as like I said, it's kind of like an extension of your limbic system, and that's, as an investor, I think it's more disturbing than helpful. Anyway, another news Tesla related is subsidies for electric cars in Germany have been announced. I'm not sure how official and when and what and how much, but overall there is definitely a good sense in the market that you will be able to buy Model 3 for probably about 10% less than the list price because of taxes and other incentives. That's a very good thing. Why the Germans are doing this, I think there's a couple of reasons. One is to help their own car industry. The other is also to help their own Green Party or green-leaning type politicians and people that actually do care about the environment. Germany is a very environmentally conscious country, and it helps to have electric cars on the road. So I think that's a very good positive sign for Tesla going forward. There's also been some news on the biotech side. Two companies in our basket have issued more equity to invest in growth. While the stocks have kind of been a little sluggish after those announcements, one of them is Twist Bioscience, the other is Illumina. I'm sorry, the other Intellia, not Illumina. The stocks have been a bit sluggish after those announcements. For us, I think we're very happy about that. If there's one thing you want to do in this environment, it's either borrow money or issue equity and invest in growth. This is the only way out of this deflationary, low growth environment that we're unfortunately um, falling into. And actually, this is a good segue that gets me to the sort of idea that I want to talk about for now. Like I said in the June 3rd podcast, which was the first podcast, the idea of the purpose of this podcast is to give everybody a bit of a feel of what we're doing, what it is on a daily basis or weekly basis, depending on the cadence. But just to get a bit of a feel for the returns, the contribution to returns, the thoughts, the process, the decision making. And that's part of it. And the other part is also I want to share some of the more important ideas that we're discussing. So we also have a chronicle going forward, and so we can go back and see what were the really big driving ideas that influenced us. And to that point, I think the really big tsunami that is happening right now in the markets is that the US is slowly but surely drifting towards a Japan-style scenario of very low rates, if not negative rates. To us, that's almost a foregone conclusion. And one thing which is almost 100% certain is that rates just cannot rise anymore. And less certain, but very, very likely, is that actually they will keep going down, both long and short. And in fact, we believe that the risk on the long end is even higher for rates to come down because they're being artificially held a bit high. And that has to do with the fact that the Fed is probably already using what they call curve management as a tool. It's something the Fed hasn't been doing before. The Fed traditionally just wants to control the Fed funds rate and then lets the market decide everything else. And because we're in unprecedented times where we have trillions of dollars being spent by the government to help the economy because of the corona crisis, and therefore you have the Fed in dire needs to finance this because nobody else has $2 trillion sitting around ready to invest in government bonds. So the Fed has to absorb all of this, and therefore increase its own balance sheet. So because we're in this circle, what we're going to see is that the government debt, which is already very high, is just going to keep increasing because the deficits will be increasing, and that therefore it's going to be almost impossible for the Fed to raise rates. Because as soon as you do that, the economy will just come to a standstill. We've even seen that before COVID-19. In last September, October-ish, we had an attempt by the Fed to raise rates. They did raise rates a few times, and then we had a turmoil in the repo market, which was driven by some speculative borrowing, hedge fund type trading by hedge funds, insurance companies, banks. It's just the reason I'm bringing up this topic is just it shows that once you get into this rabbit hole of low rates, the behavior of people and governments will become such that as a Federal Reserve, as a central bank, you have actually no choice but to keep rates low or even keep lowering them, because otherwise you will choke the economy and you bring bankruptcies and all kinds of bad things to the table. And since there is an implicit agreement, it seems, between the politics, the society, and the Fed, that we just don't want to accept that. We don't want to accept a massive restructuring of the economy through bankruptcies. It is therefore almost a foregone conclusion that rates cannot rise and probably will go down. And because we have low rates, we will see a continuous flow of money from the Fed to the banking system, and from the banking system into quality assets first, and then maybe also into less quality assets. But quality assets will be bid up. Quality assets, from our standpoint, are particularly companies that have real growth, such as Tesla. We think the CRISPR basket, that's real growth. There's no hanky-panky inflation type growth. It's just pure innovation, technology, solving problems. We believe Microsoft and Intel are in that position also by providing crucial technologies for future growth. And then we're actually also contemplating adding more leverage to the portfolio. Particularly, we're looking at aerospace as a potential investment because the stocks there have been a bit down for various reasons. And we also believe that there's a new area of space exploration and generally aerospace investment that is upon us that should be very interesting from an investment standpoint. So that's it for now, and I'll talk to you next time. Thank you.